Hey traders, welcome back to the channel. In today's episode, I'm going to be sharing with you yet another excerpt from our premium community mentoring session / Ask Us Anything that we do every single week for all the members of our premium trading group, where we share our knowledge, our alpha, and we ask questions that our members submit to us. In this week's episode, we're going to be discussing a fantastic question from a longtime premium member, Sasha, about how to best prepare for the next cryptocurrency bull market. We're going to talk about how to position yourselves into the tokens that you want, multiple ways to do that, and my recommendations. We're going to discuss how to exit the market safely with your profits intact. Again, we're going to share several strategies with you on that. And then finally, we're also going to talk about the emotional discipline, the patience, and overall the entire mindset required to successfully navigate such a cryptocurrency bull market from a bull market veteran. So I hope you enjoy. If you'd like to have your questions answered, please join the premium trading group. Information on our website, link in the description. Let's get cracking. How to prepare for the next bull run. So this is an important question because it's coming up on us. Time frames really change your strategy and the type of trader or investor you are, not only in cryptocurrency, but because market cycles move so much faster in cryptocurrency. I would say that being aware of this concept is more important in cryptocurrency than it might be in other markets like the stock market, which tends to move a little bit slower. For example, what I mean by that is back in, whether it was 2019 or whether it was 2015, for example, or 2014, identifying or having the conviction that in the future, there was going to be a bull market or an appreciation of prices pretty much across the board that would dwarf any of the low momentum, low volume price action that you see during bear markets or more frustratingly kind of consolidation periods like we've been in, is going to allow you to make different investment decisions with different time horizons. So when you have the conviction and belief that we are going to be experiencing a bull market relatively soon, then you're more inclined to begin building up larger, in my opinion, unleveraged spot positions. Obviously for the majors, and then identifying coins that you think will do well for the upcoming bull market. We're going to cover a little bit more in depth that token selection process in a minute, but that is an important part of the process, of course. But in general, what I've learned in cryptocurrency is that it's less critical than you might think, with a few caveats. So a rising tide lifts all boats, and pretty much everything performed well in the bull markets. There are a few tokens that did not significantly appreciate. So cryptocurrency is very forgiving. It's very forgiving to trade in during bull markets. Generally, all you have to do is be patient. In fact, being patient is often the key solution to most problems in trading, but we'll talk about that another time, perhaps. You have to have or identify some thesis or conviction that there is going to be a bull market. Now, I have mine for multiple reasons. One, I'm a long-term bull on Bitcoin because I understand the technology and I understand its use cases in the future. And I've seen what happens to the valuations of things that are fundamentally valuable. And the more those things become visible, the more valuable they become. So I think that my central investment thesis around Bitcoin has actually never changed from day one. There has never been a time when I would have not encouraged somebody to buy Bitcoin in general. And even the amazing thing is, again, patience being key here, you could have bought at the top of every bull market prior and made significant gains, right? The advancement from bull market high to next bull market high, while it is decreasing in its exponential growth, that number, that percentage gain is still pretty incredible, right? 20,000 to 65,000, right? So we should expect, because the advance from previous bull market high to next bull market high that expressed as a percentage has been declining forever. And to showcase that, let's just look at BTC USD on Bitstamp, for example, and we will look at, let's say, the monthly chart, and put this baby into logarithmic scale. Thank you very much. Okay, so from the peak of the market in 2013 to the peak of the market in 2017 was a 1,650% growth. Very impressive. And of course, the growth from 20 to 65 was impressive, but that was only 230%. So we are experiencing a pretty significant decline. This is a peak too, but we could measure here to here. Of course, this is even more. So we had 9,000% to 1620% to 230%. To where we're essentially, I think the best projections, the most logical ones that I've seen right now, are looking at something on the order of like 100 to 150%. So if we had 100% rise from the previous all-time high, that would be putting us up around 138,000, and 150% around 174,000. That's all very loose math, the actual area, but just having this rough zone from, let's say, $100,000 to $130,000, knowing that's the area ahead of time that you want to sell at. This is another very important aspect of being prepared for the bull market, because being prepared for the bull market doesn't just mean having the right investments or buying the right coins at the right time. It also means pre-preparing your exit strategy. So that the biggest problem, I don't know if you guys know this, I do say it all the time, but the most common issue that comes up in one-on-one mentoring for me with either newer clients or those who have been with us for a long time tends to be the lamentation, or the pain, I would say, of having had a lot of money during a point of the bull market and then not exiting positions due to generally greed. So that is the biggest problem that I see investors face in cryptocurrency. And it's certainly a problem that I faced as well. The market is hot, things are moving up. You don't want to miss out on gains. You don't want to sell down here when you could sell up here. And you're never going to be able to make a good decision in the heat of the moment. That is not how strategy works. That's not how anything scientific works. You don't say to yourself, like, I mean, certainly you can, but you can certainly understand the difference in likely success outcomes for those who wing it and those who have a plan and stick to the plan. So we know that sticking to the plan is the way to go. So that is a very important aspect that I would very much exhort you guys to do. Even more so than, okay, well, what do I buy and when? That's all well and good, but how much do I want to sell and where? All right. And I've gone over this very simple strategy many times, but something that you can do, and this only is going to work on coins that have some historical activity. So something like Bitcoin, where we have a lot of price history, something like Ethereum, BNB, XRP, any chart that has some pretty sufficient history to its chart is going to allow you to do this. And essentially in any situation where prices have moved up significantly and now we are lower than the all-time high. When you are at or above the all-time high, you have no frame of reference. The only, there's several tools you can use. Obviously, there's many tools you can use. Probably the most common and one that I tend to use when we're looking at blue sky breakouts is when I will actually look at Fibonacci extensions, right? So, for example, up here at the all-time high, we don't really know where prices could possibly go if they kept going up. Well, okay, we have multiple things that we can do, right? We can obviously measure from the previous impulse to the top, and then measure down to the point of the breakout, for example, and then target 618s or 1.1s. Any of these things, any of these methods are fine. Again, it doesn't really matter what methodology that you want to use. You can even do, for example, market comparisons. If we're talking about altcoins, so you could look at the market capitalizations and price growths of similar projects or similar coins, and attempt to come up with a fair valuation based on that, and then set your take profits along the way. The method that I was talking about when you have a coin with some history is just simply, if we're down here. So I'll give you an example on Bitcoin's chart here, for example. Let's, I think we could, no, we don't have to, but we can definitely remove these two. I don't necessarily think they're going to be helping us out. But just go to your chart on TradingView and get your horizontal lines out. And you essentially just want to move your mouse cursor or the crosshairs or whatever cursor you're using, you know, from left to right. And you're going to stop every time you come to a swing low or a swing high. Anytime where the market, you know, moves away from a pivot point, either down or up. And you can zoom the chart out as much as you like. And you just want to come to that level. And you want to look left and you want to look right. And you want to see, is this a level that price action has respected, either as resistance or support multiple times, indicating that this is an area of significance, and it would be wise to identify and note this area so that when price comes back to it later, you can make decisions. So this is a weekly chart, and my mouse is currently over kind of this resistance area right here. And if I just draw a line here, I can look back to the left and I can see that price had consolidation and a little bit of support / resistance here. We had resistance here, obviously. We had resistance here, and then we broke through it. This would be an area that I would be very interested in if price were to come down here and test ever 12,225, which is actually pretty close to where the delta price is. That's like our worst case scenario. If one of the tenets of our 4-year cycle thesis does not play out, which one of the last tenet of or prediction of the 4-year cycle thesis is that following the capitulation bottom and the subsequent rally, price does dip, but it never goes lower than the capitulation low that was established. That's the pattern that we've seen over and over in Bitcoin's history. And if we are to repeat it, then price will not go below 15,627. But if it does, then our on-chain evidence would suggest that 12,225 would be the bottom price for Bitcoin. So we repeat this process over the entire chart. Identifying all of our significant, basically, support and resistance levels. And then for investing or for buying, you buy all the support levels, right? So let's say we're marking off this as a support level. Let's just change this to, put this here. I'm just going to make some examples. And I'm not sure where that's weird. But we'll make this green, for example. And yeah, so let's just say we're putting lines here and we're putting lines here. Okay. So the way I would do this is if price comes down to these levels, I'm going to make buys, and I'm going to make increasingly larger buys. And this is a part of that preparing for bull or bear markets, identifying when you want to get back into the market and how much. And doing the work ahead of time is going to prevent you from making mistakes, and it's going to just give you a plan. You just follow your plan and you make money. Even bad plans, if stuck to well, tend to generate returns. Consistency is very powerful. So yeah, so let's say we've got 3 lines. We've got 100% of the funds that we want to allocate to Bitcoin here. So we can say we're going to invest 20% of our funds here, 30% of our funds here, and 50% of our funds here. That's a completely acceptable way to do it. And we're going to do the exact same thing on the way back up, right? So we're going to identify our levels that are above us. So like here's one, for example. And I'm not sure why that little toolbox isn't appearing, but I digress, right? And here's a level here. Okay, so we've got 2 levels above us. Of course, you can draw more. And we can say, okay, well, we want to exit our positions. We want to exit like 20% here and 30% here. And then we're going to leave that other 50% for our ultimate target zone. And this might seem, so let's say our target zone is, what is going on here? Here we go. Rectangle. Say, like I said, our target zone is like 100, 230,000. So that's our ultimate target zone. So we are going to reserve 30% of our funds for this area right here. Or excuse me, 50% of our funds for this area here. You can, of course, that's more aggressive. That's a more aggressive approach. You could be more conservative and say that, no, I want to take 50% here. I want to take 20% here, or 30% here, and I want to take 20% here. However you want to do it. It's just depending on whether you want to be aggressive or conservative. Now, this is, in my opinion, the best way to go about essentially investments. I've done this so many times, guys. I have gotten into coins early and I've seen them completely skyrocket, right? Pump thousands of percents. And I've tried both approaches, where I have tried the kind of YOLO approach, which is, you go in with whatever funds you're going to go into. And then once you get a really impressive, powerful movement, you just exit, right? Or, you exit, you try to exit on the biggest massive pump you could see, trying to expect that's pretty much the top. And you tell yourself that you're not going to care if price keeps going up, or you wait until maybe there's a sign of failure, like maybe prices go all the way up and then they start moving down slowly. And so you'll wait until you see some kind of confirmation to start selling. I would say that that's probably a little bit better than the first approach of just trying to exit on a big pump, because sometimes after a big pump, you'll get an even bigger pump. And as much as you'll tell yourself that, oh, well, I don't care, I'm just going to make my money and not look at the chart, most of the time you will. And that will start to breed and engender kind of feelings of insecurity in your own strategy or trading. So I would recommend generally avoiding that approach. And the second approach is better, waiting for some kind of confirmation for the sell. But the problem with that is, in the beginning, it's going to be tricky. You are always going to find ways to, in the moment, like convince yourself why what you're seeing is not what you're seeing or what it is you want to see. We are masters of diluting or tainting what our senses are actually telling us, and, hearing the story that we want to hear in very many aspects of our lives. So, and sometimes specifically, you don't really get much of an opportunity because, huge dumps can come into the market, especially with lower liquidity coins, and wipe out your gains very quickly. And if you were waiting for some kind of confirmation, well, you've kind of lost a lot of your profits while you were waiting for said confirmation. So both approaches will work, but I think there's a better way. And the better way is to act like smart money acts. And the way smart money acts is they accumulate slowly. Okay. The best traders typically will use a process called T-WAP, time weighted average price. And what that basically means is that for these traders, when they get a signal, it's not, let's say that a normal trader will get a signal and they will take a position, they'll buy whatever their position size is going to be, calculated at their position size. They buy the whole position size right there. They set their stop loss and their take profit, and then that's it. This is the way I advocate to trade. But and there's nothing wrong with that. That is much better than YOLOing in all your whole stack or whatever it is that you're doing. But a more sophisticated approach is to use something like T-WAP when you do get a signal, to basically say, okay, my system has identified a profitable potential entry zone for Bitcoin. It's not this price that's so important, it's the zone. And so I am going to spread out my buys over time into this zone, and only once all my accumulation has been done. And you'll see whales do this on a large scale over the course of weeks, months, and years. And you'll see, smart intraday traders do this over the course of minutes and hours. So not buying all at once in one place, but buying slowly over time to, again, referencing the most powerful investment tool I've ever discovered, dollar cost average into a position. And so I'm just taking these same concepts with what I'm suggesting here, and I'm magnifying them out to a more macro scale. So we want to accumulate slowly over time for our big positions, and we want to distribute slowly over time as the market moves in our favor. This allows us to not make any rash decisions. This allows us to stay in the market if it does continue to pump, and it allows us to absolutely lock in profits when our price areas are reached. Okay. So this is all pre-planning, pre-strategy, getting your game plan ready ahead of time. We're going to cover token selection here in a bit, but having that plan, once you've identified what you want to hold, then you need to identify when, where, and how you're going to exit. And you need to write it down. You need to write it down on a piece of paper, and it needs to be somewhere where you can reference it when that time comes. I don't think just drawing it on the chart is sufficient, although I recommend doing that as well, so you have a visual representation. You need to really write down your intentions in a very personal and an authoritative way. Again, the reason why is because when the market gets hot, when we start pumping, when the bull market comes, a lot of rational decision making can easily go out the door. You will do things that you would not have done otherwise. You will think things that you will not have thought otherwise. And successfully investing in a bull market or bear market is a true test of one's willpower and courage. And I don't say that lightly. It really is. It's not easy. It's not easy to successfully weather the storms and make the right decisions. What's not hard to do is to develop your game plan ahead of time and then stick to that game plan by doing these little things that will help, that will compel you more strenuously to obey and respect your former self. Because you're you now, the you that you're going to be when prices get up to 100,000 might at that time be a completely different person. So, this just all comes down to personal willpower and conviction, and we're all going to struggle with this. I don't think there's a lot of people out there who can just say that they're going to do something and then when the moment comes, actually do it. This is kind of the story of being a human. But these little tricks and tips will help. Identifying the levels at which you're going to sell at, and then writing down that you will do that you command yourself to sell at those levels. If you want to experiment with the first two strategies I talked about, where essentially you're going to exit on a big pump, you need to be more specific than that. You need to write down essentially like what multiple of X you're looking for with your investment, or what percent gain you're looking for from your investment. And then you need to specifically write down what those levels are or what those zones are. And how, again, very much like the example I'm showing on the screen, how much you want to exit that position when you do get there.
Justin, I got a question.
Yeah.
This makes all sense for like you said, the coins that have a history, like Bitcoins, Ethereums, the blue chips that went through prior bear markets, bull markets, because you have some kind of measurements. But we all know that, the real life-changing money, we are not going to be making it on Ethereum or Bitcoin, right? We're probably going to make it on the new Doge or on the new, I don't know, Matic, whatever.
Sure.
So my experience with this is the experience that I had with Doge back in 2020, right? That's how I got into crypto, obviously. So I bought like $50 of Doge, and then I sold half of it after it did 2x. I sold another half of what I had left after a 3x. And then I sold everything else after a 4x. And then it did another 900x. So, how is there any, based on your experience in trading in the years, is there a better way that you found to handle like these coins that just explode the day after you sold the last bag that you had of them?
First off, I agree with your primary point that the life-changing money is going to be made on the new coins. I actually just posted about that in this morning's market update, where I had made the suggestion, I had suggested the idea that, in a very real way, it does kind of seem like the majority of altcoins from yesteryear, from previous cycles, are a little bit tainted. A lot of them are going to be burdened down with regulation in the coming years that we know for a fact that newer tokens are largely going to ignore until they get big enough to where they can't, right? So when we have, sub 1 million, even sub $10 million market cap projects, they're not too concerned with regulation. And so because it's crypto, they will allow you to simply invest in the token and profit off of their success or lose from their failure. And that, yes, the life-changing money is going to be in identifying the coins that fit the new narratives, the new themes, and then positioning into those tokens. So your question is there a way, do I know of a better way to essentially ride the full pump? There are certainly better ways to do it. Let me give a few suggestions. You can do the I would say kind of the nerd approach, which is probably the best thing to do, because the majority of coins are not going to 900x, right? Like the vast majority of coins are not going to 900x. So you need to prepare your investment strategy in such a way that you can get a reasonably good return from a reasonably good amount of your investments. And I wouldn't recommend trying to optimize your investment or trading system to focus on edge cases, the coins that do 900x, right? Because you have a very low probability of catching those coins because there's only going to be a few of those. And you have a high probability of catching a bunch of 2, 4, 5, 10xers, right? So I think that a more robust strategy is going to focus on optimizing those returns, those gains, those trades, those investments, instead of trying to optimize for the one coin that you could enter and make you rich. Something about that seems seductive to me, and I get it, but it also seems very not sustainable, right? Like if your investment strategy is catching the next Doge, that seems to me like a very hard strategy to optimize, because it relies on so many factors outside of your control. When what we do know for a fact is we know that the vast majority of coins are going to 2, 3x. And so let's just catch those consistently, right? That's what being a good investor is. A good investor is not an investor who focuses on trying to find that one trade or play or investment that's going to allow them to retire forever. That's a fantasy. That's a fantasy. And it does happen, right? But it happens chaotically and randomly and to people who didn't even expect it. And you know what I mean? Like,
yeah.
So ideally we leave ourselves open to that kind of gain, but we optimize for catching the low-hanging fruit, the stuff that we know is very likely to happen, right? So we know a 2x is very likely to happen. We know a 4x is very likely to happen. Even a 10x is somewhat uncommon likely to happen. So I think the better and more sustainable strategy that will allow you to be an investor for a long time and have long-term success is optimizing those, right? A good example of this is I was just mentoring a student the other day, and they've been exercising this DeFi strategy for the last several months, and they've grown their account from 5 to 15,000. And at the peak, it was 22. And I won't go into it too much here, but essentially, like that's what they're doing, right? They're not, the coins that they're investing in are just like doing 2x's or maybe like 3x's. They're like low cap new coins that are listing, and they've got their own strategy for token selection, which I'll leave up to them. But they're essentially doing exactly what I'm advocating here, which is, they're getting in, they're getting their flip, they're taking their profits, and then they're looking for the next coin, because that is something that is continuous. That is something that is steady. Money is always flowing into new tokens, and new tokens are always coming out. So, obviously the key to that particular strategy is the token selection, but that's going to be the key to every strategy. It's why we do so much work on our signal system, for example. So just an idea that comes to my head and things that I have certainly done in the past. This is what I do. This is exactly what I do with all of my positions, right? You guys will notice that you guys note, for example, that I took a position in guys, and I've got exactly every area written down where I want to take profit on guys. It's literally in the signal. So there's that. So with new coins, I think you can, the easiest way to do this, the most practical way to do this is just with multiples of X, right? So your entry price and your position size. So the same thing, you're going to pull open the chart, you're going to get a piece of paper right down next to you, and you're going to identify the levels at which you want to sell. And then when price gets there, you do that. Now, for what you were suggesting, or for what you were asking, how can we, what's a better system, or what's a strategy to identify and capture that 900x? Well, I think that's the trophy trading strategy. So the trophy trading strategy I've talked about many times, and that's when, so I'll talk about what the trophy trading strategy is specifically. When you take a trade and you go to exit your position at the take profit, instead of selling all of your position, you sell 95% of it, right? Or 98% of it. And what you do that way is that you allow yourself on all your winning trades to build up slowly over time small positions in these tokens that you can then hold for the bull run. Okay. And that has worked out very, very well for me. I've been doing that for years. And it's how slowly over time I've just built up these small bags of tokens that, you know, when the bull market comes, I will just kind of randomly, honestly, distribute them as prices are going up. It's not that, like, if you've, you know, accumulated small bags of a lot of different coins, it's really not that difficult or onerous to just, like, you know, once we're in the bull market and prices have been going up for a while, you know, just like every week, you know, like sell a little bit of this, sell a bit of that, a little bit of that. But it's just the exact inverse of dollar cost averaging. Your dollar cost averaging your exits on the way up. That is going to allow you to get a good average of the entire movement, which is what good trend following traders do anyways. They focus on the body of the trade and they leave the head and the tail for the reversal traders who have a higher probability of failure. So I think that's my best suggestion. So for example, practically how that would look is you do the exact same thing. Let's say a new token comes out. You want to put some money into the token. You want to put $1,000 into the new token. Okay, great. So let's say you get, you know, 10 million tokens for $1,000. Well, when you can calculate out from your entry price what a 2x is going to look like, you can do that based off market capitalization, or you can do it based off the price of the asset, and set your alert there. You can use Dex Screener to set alerts. I highly recommend using that platform. It's great for DeFi coins. So set your alerts for those price levels, and then when price gets to those levels, exit. And again, I wouldn't exit all at once, because that is the problem. The problem of exiting all at once, whether it's the sell on a big pump strategy or the wait after a big pump and wait for some confirmation of a reversal. I've gone over the issues with both of those strategies and approaches. Obviously, they are viable, but they have issues. I think the better way is the T-WAP approach, which is essentially a time-weighted average price, where we are selling at predetermined price levels for predetermined portions of our bags. And then to solve your like 900x problem, you know, that's the trophy trading solution, where after we've done all of our distributions, you know, we can reserve this, and this is going to be based on your level of aggression. We can reserve a percentage of our funds to hold for the moon, you know, for a moonshot. It's your moonshot bag. So whether that's 5% or 10% or 20%, are going to be extremely aggressive and do something more than that. I don't really recommend that. That doesn't sound right to me. I think that if you start getting above, and yeah, I think honestly, if you start getting above 10%, but it just all depends. Things get, you're now, as you start to get above 10%, I feel your strategy is sounding more and more and more like it's optimized for that particular movement. So again, things to consider, things to ponder about, but I think that's the answer to that question. And overall, I think that's the answer to how to prepare for the bull market. You know, you want to make sure that you are identifying exactly where you want to exit the markets with your investments, whether they be old coins with the strategy that I suggested, or whether they're with new coins with the strategy that I suggested. So there's a lot there to digest. That would be, yeah, that is my answer to that question. Selling all at once doesn't work, and you want to leave yourself open to being able to ride the gains, right?
Yeah.
And I think that strategy accomplishes both of those things. Thank you so much for watching all the way to the end of the video. Again, if you would like to support the channel, make sure to subscribe, hit the thumbs up button, and share us to your family, your friends, heck, even people you don't like. Hey, by the way, why don't you watch this video over here next?